There's 11 frequently asked questions to hard money lenders. If you don't know me, my name is Jason Bell. I'm from Hard Money Bankers. I've lent private money on over 4,000 real estate transactions since 2007. So number one, what credit score is needed for a hard money loan? When I say hard money lender, I'm talking about a real hard money lender that uses private capital, not an institutional backed lender or a bank. They don't have minimum credit score requirements. Any credit score works in the transaction because it's not really credit based. It's mostly collateral based. Now, lenders add everything in the transaction, including the credit, but it's not their final determining factor. So yes, if you have a lower credit score, you might need to bring more money to the table, have a higher down payment, but it doesn't disqualify you. And typically any credit still will work when you're using a hard money loan. Number two, how hard is it to get a hard money loan? Hard money loans should be easy, fast, and flexible, right? You're not going to a bank. There shouldn't be any red tape. It should be an easy transaction. Now, you do have to have a good piece of collateral. And when I say collateral, a good real estate asset, either an investment piece of real estate, investment residential property, or commercial property. But it's fast and flexible. No tax returns, income documents, things like that. The lender wants to know that you have the capacity to execute on the project. Maybe you fix and flip the property, you fix it, hold it, turn it into a rental. Maybe you need a bridge loan on the property before it sells. But it's mostly collateral based in nature. And it's a pretty easy transaction, typically within a few business days, maybe a week after due diligence and title work and things like that come in. Number three, how do you find a hard money lender? Now, hard money lenders, they're out there. Now, obviously, start with referrals. That's the best way to do it. Talk to other real estate investors that you know, maybe in your local market or your meetup group or your RIA group, a real estate agent, mortgage broker, title company, someone who's used a hard money lender before. That's typically the best way to do it, right? We all want to find someone and get a referral from somebody that you had a positive experience with. So that's a good way to do it. And you can always Google something like, hard money lender in the state of so-and-so, and make sure they have a good reputation. They got Google reviews, Facebook reviews, they're vocal on social media, and pick up the phone and call them and see if you can build a relationship with them. And if it's somebody that you can relate to, I think that's important. Number four, how quickly can I get a hard money loan? Hard money loans, again, are supposed to be quick. 1 day, 2 days, 3 days, as soon as proper due diligence. Yes, hard money lenders do want to be a first position, a first lien on the property. So you do have to get title work. And in some states and jurisdictions, title work might take some time, a few days or a week or so. But as soon as title work's done, they're using their own money. They're using private capital. Our company, Hard Money Bankers, we use our own funds for these deals. I don't have to go to a bank committee or sell the loan to somebody else or go raise capital behind it. We're doing it in real time. So as fast as we can do due diligence is as quick as we can get done. There's many instances where real estate investors will come to us and say, hey, I had a loan that fell out from another lender. I need to close quickly. I need to close tomorrow, or I'm going to lose this $20,000 deposit. Okay, great. We'll go out to the property maybe if we need to. Sometimes we don't need to go to the property. Do that later today. First thing in the morning, we'll order title work, insurance. Hey, send me a few documents that we need, your ratified contract, maybe your construction scope of work, and we'll get this thing under wraps. I'm not saying that lenders are not going to do proper due diligence to protect their interest, but they can move quick. Number five, how much down payment do I need for a hard money loan? Depends on the lender, typically about 20%. That's usually what it is, 10%, 20%, 30%, give or take. It depends how good the property is that you're purchasing, but you will have to put some skin in the game and you will have to put a down payment down. And industry average, probably 20%, give or take. What is the average interest rate of a hard money loan? So most hard money lenders typically range between 20% on the low end to maybe 16% on the high end. Somewhere around 13%, give or take, is usually where it takes. A little over 1% a month. That's usually the way to say it. So if you get a $100,000 loan and it costs 12%, that's 1% a month, for the capital. And if you need it quickly, it ends up being pretty affordable. Give or take 12, 13, 14%. That's usually what it is. There's usually also points, anywhere between 2, 3, or 4% of the loan amount as like an origination fee or points. That's what that's called. Okay. Do hard money loans require an appraisal? Typically, no. They're not a bank. They're not institutionally backed. They don't typically get an appraiser that doesn't have an economic interest in the property. Not to say that there's not value in an appraisal in general, but most hard money lenders don't get appraisals because they take time and they're not all necessarily needed. Most lenders Private lenders, hard money lenders, they're pulling their own comps. They know those areas. They're localized. So they know the values of the property. So they're going on MLS and they're pulling data. Maybe they'll look on public sources, land records. Maybe they'll go to like Zillow and Redfin and Google Street View and things like that to determine what value. Maybe they'll get like a broker's price opinion or a CMA or something that a real estate agent can put together, but typically not a full appraisal. It's usually not necessary for them to determine what the value is of the property. So that's good because it saves time. What are the 4 C's of hard money lending? So typically hard money lenders follow what's called the 4 C's: collateral, character, capacity, credit. And that's usually the order of importance as well. So the collateral being the property that they're putting a first lien against, the character being the characteristics of the borrower. Are they good communicating? Do they think they can execute on the project? Capacity meaning, do they have the cash down payment? Can they make monthly payments? Do they have the capacity to perform? Do they have the exit strategy that they can to get the loan? And then credit. Credit, isn't everything, but it does tell a story. So it is important to pull credit as well. How do hard money lenders determine ARV? ARV stands for after repair value. So typically they'll use comparables, comps on the property, through MLS, and they'll determine. And they use an ARV typically if it's like a fix and flip project where someone's going to borrow buy a property, renovate it, and then resell it at a higher dollar sign. They'll use the after repair value to determine what that resale value is going to be. And that's not necessarily like houses that have recently sold that are livable or had wear and tear. These are like nicely renovated houses. Like, what's the property going to sell for after it's fully renovated? And usually sales comparables based off the MLS is the best way to accomplish that. Why would someone use a hard money lender? So typically, real estate investors use hard money lender for speed and flexibility. That's usually the 2 reasons they use them. It might be because they don't qualify for a bank, or they just don't want to go to a bank, or maybe their credit is a little bit lower than a bank will accept. But the hard money lender value they bring to the table is they're fast and they're flexible. You can't put a property under contract at an auction and expect to show up with bank's money. Let's say you're willing to put down 20%. Your bank is not going to have that money ready for you in a week from now. It's just not possible. In most jurisdictions, you have 1 week to buy an auction property or a sheriff's sale property, or you talk to a distressed seller and they're like, I really need to sell. I'm in foreclosure. The foreclosure sale's on Friday. You're not going to get a bank loan. You need a hard money lender. That's what's going to work. So real estate investors are willing to compromise and pay a little bit more, for hard money, private money terms, because if not, they're not going to get the deal. They're going to lose out on opportunities. So fast and flexible. Sometimes they don't want to deal with the headaches. We've done loans, 100 loans for a real estate investor. He's got cash, he's bankable, but he just wants the easy, flexible solution of using us on some of these things. He doesn't have unlimited cash, obviously, or he would just buy all these properties himself, but they're very qualified. They had good credit. He still wants to use a hard money lender because it's an easier transaction as a real estate investor to use. Now, keep in mind, like the opportunity cost. Would you rather use, a lower interest rate bank that's going to take 30 days or 45 days, or a hard money lender who might be a little bit more expensive, but they can close quickly? You got to determine what position you're in. And do you make monthly payments on hard money loans? That's number 11. Yes, typically hard money lenders collect monthly payments just like a regular bank. So for instance, if you close in the month of, let's just say February, you typically skip the month of March, and then your first payment due is April 1st. And April 1st payments are due or collected in arrears. So April 1st payment would be March 1st through March 30th interest, just like a home mortgage at a bank. That's typically what happens. Sometimes there's prepaid interest, or there could be prepaid interest. Sometimes there could be deferred interest, where you pay some money on the back end, but typically monthly payments are made. So out of the 17 years that we've been lending hard money through our company, Hard Money Bankers, these are, very common questions that we get from potential borrowers, real estate investors, and commercial property owners. I hope you enjoyed this video, and if you did, share it with somebody. Share it with another real estate investor or commercial property owner that you think could also value from this. I appreciate it.